What's up, you guys? It's Rob here. Today I'm going to be talking about a stock that had a dramatic sell-off last week, and personally, I think either might have a little bit more of a sell-off to go, but I think it might be possibly a good dip opportunity. Remember, this is not financial advice. Do not do as I say. Take this as information only for you to make your own independent decisions. So invest with your money. Don't let me tell you how you should invest your money. That is not the point of this channel. The point of this channel is to have the DD that I do on these stocks help you either support or prove against your theories or my theories and all that kind of stuff, so we can in the end have better DD for each other. But anyways, getting that out of the way, the stock that I'm going to be talking about today is ticker symbol VIAC. And really, the stock was $100 on Monday, and by the close of Friday, it was sitting at $48 a share, which is roughly about a 51% drop of the week. We'll hop on over to the chart here in a second, but VIAC was on a tear up until this week, and the company rose nearly tenfold in the past 12 months. Roughly a year ago, the share price was $12. And the rally came as the company made this move towards streaming and recently launched Paramount Plus to compete against Netflix, Disney Plus, HBO Max, and others. So needless to say, CBS wanted to move in the right direction. So, and CBS has a vast archive of content. They have the whole entire CBS broadcasting network. They have Paramount Films. They have several cable channels like Nickelodeon, MTV. But let's go hop on over here to the chart really quickly so you can take a look at this growth that I was talking about. Literally just a stair-step growth for really so long. We can zoom it out to a 1 year and you can just literally look. It was pretty much 1 year to the date, 1192. It's 406. I mean, we're at 328, so we're within a few days, but you can just see the slow, steady growth that took place with the stock as it rose all the way up. Now, why did this stock fall last week of essentially 51%? Well, there was a few things that we can make note of mention, and really one of which was Viacom CBS was held by Goldman Sachs and this hedge fund called Tiger. I believe it's called Tiger. Let me make sure I'm getting this correct. Tiger Cub Management, I believe. Okay. Goldman Sachs. Yep. Additional offerings. Yep. Okay. All right. So, I mean, it was held by this hedge fund that was like apparently heavily leveraged and running 2-to-1, 3-to-1 leverage. And that's not something that you want to be doing as a hedge fund. And then the next thing you know, you're getting margin called. And the DTCC is going to come look at you and say, all right, we want our money. And when you don't have the money in your account, they're just going to start liquidating every single one of your positions. And then on top of that, they're going to be literally liquidating every single one of your assets at the hedge fund. Okay. All right. So it was Tiger Asia Management LLC, and the founder was Bill Huang, who now runs Archegos Capital. Okay. So that was one of the hedge funds that literally liquidated $2 billion of Viacom CBS. Now, Viacom CBS had roughly about $30 billion go out of their market value last week. But the hedge fund was one of the problems. The other thing was the chief executive, Robert M. Backish, decided to make a public offering. And he made an offering, I shouldn't say public offering. He made an offering of shares that was roughly worth about $3 billion. Well, when the underwriters went to write these shares, they didn't value it at $100. They valued it at $85. Now, when a company issues essentially new stock out as an offering, the value, it dilutes the value of the current shareholders. So some drop of the price is expected, but really a few days after the offering was made known, one of Wall Street's most influential researchers, Moffett-Nathanson, published a report that questioned the company's value and downgraded the stock to a sell, essentially saying the company is overvalued. You need to sell out of your position because it is honestly not worth this amount of money. And the stock, in the firm's eyes, should only be worth about $55. So this, along with the offering, helped the nosedive, along with Tiger Asia Management LLC pretty much being liquidated. So these things really were negative catalyst on the stock, and $55 is a long ways away from $100. So you got a long ways to fall. And then on top of that, you have Wells Fargo is saying the stock is essentially being downgraded to a price target of $59. So you have $59 and $55 as price targets. Now, the other huge thing that took place was Goldman Sachs apparently liquidated about $10.5 billion of assets between DISCA, which is Discovery's stock, and then also several other stocks, which also included Viacom CBS. So this is huge. And then, like, yeah, it says it right here. Goldman Sachs offered 30 million shares of Viacom CBS, and Morgan Stanley offered 15 million shares of Discovery on the block trade. So the whole reason why these two dropped was because Goldman was wanting to get out of these positions because they're seen as, quote unquote, I should say, tech stocks, and they want to transition over to safer growth stocks. Now, some people are saying that Goldman is selling off a lot of their positions because they're being margin called because of AMC and Jimmy. I don't have anything that directly can say that this is the reason why they're being liquidated is because of AMC and Jimmy. I don't want to say that. There's people on YouTube that are saying that, but I personally haven't seen the DD that says this. So if you can, link it down below, and I will gladly admit that I'm wrong because I'm here to learn and here to learn along with you guys. I mean, I'm just a smooth brain ape like the rest of you guys. So, but anyways, with all of these negative catalysts, that's the whole reason why the stock sold off. And personally, I could continue to see it sell off probably in the Monday. But with the weekend being a longer time frame, I could also see people looking at it being like, well, the stock's $48 a share right now. There's two price targets at 55 and 59. Maybe if I get myself if I watch the stock come Monday morning, because personally, I never buy options within the first 30 minutes of the market being open. I always wait till after 10 because I don't want to get IV crushed and all that kind of stuff. But really, when it comes down to it, people might look at this and say, all right, well, clearly Goldman's out. Clearly Morgan Stanley is out of Discovery. And this hedge fund got liquidated of their whole entire position. So there's a lot of shares on the market. It's going to come, do we buy or do we continue selling? And if we continue selling, I mean, 39.61 was the bottom on Friday, so we could easily revisit that. Or we could hold our position and see those price targets of 58, not my bad, 59 and $55. So it might be a great opportunity. My suggestion is to sit here and wait until 30 minutes after opening and closely monitor the stock to see how it's doing. Is it continuing to sell off? If it's continuing to sell off, what I would do is I would wait until the stock stops selling off, because you know the difference between where it's going to sell off to and the price gap is really large right now. Like if we pull this up here on Webull and we look at the stock for a whole entire year to date, we can see that we're literally almost testing oversold on the year to date. If we pull this into, let's say, 3 months, you can see literally the MACD is saying that we're oversold. You can see the RSI is saying we're oversold. So we can only be oversold for so long before we gotta go up. So the question is, how much lower is the bottom of the barrel? Are we at the bottom, or is 39 the bottom? If 39 is the bottom and we revisit $39 next week, then maybe we should consider looking at getting in at $39, knowing that we have a price target of $59 or $55 and we can just ride the wave back up, because we're a bunch of smooth brained apes. And what do we like doing? Buying the dip. So, but let me know what what your thoughts are down below in the comment section. Let me know if you guys have any additional DD on it. Feel free to send it to me, DM it to me on Twitter or something like that, because I want to learn a little bit more about the stock, because people seem to be trying to wrap it in with the GameStop and AMC saga, which I don't think it really should be wrapped in with. But hope you guys have a good one. And remember, like the video, hit that subscribe button, ring that bell. Feel free to share this out to anyone who has any questions about it. And feel free to correct any of the comments that I made in here, because much like you guys, I'm kind of learning as I go. So I'm going to make mistakes. I'm going to say some incorrect things, and I'm going to say some correct things, but I hope I'm going to always be more correct than when I am incorrect. So have a good one, and I'll see you guys in the next one.